Well, this is the first time I get up and I've got a little bit of extra time, and it's probably not the first thing that Nick has butchered, just for the record. In terms of what I want to talk about today, I want to talk about a little bit of love for commodities, my love for silver, my love for gold, and my love for copper. And what a great time to be falling in love with all those three commodities when they're all at record prices, with silver nearly 59, copper well over $5 Aussie a pound with our weak Australian peso. That makes it a pretty good Aussie dollar equivalent. The Canadian dollar is in a similar situation as the Australian dollar, but also with gold well over 4,000 US an ounce. All of these three commodities are in Cygnus metals, but it is predominantly copper gold and with a nice little silver kicker. So when we say copper equivalent, there's sometimes a lot of companies that will put zinc and lead and turn it with a bit of copper and turn it into a copper equivalent. We are purely copper and gold with a very high-grade resource. Now, I know the word high-grade gets used a lot in our industry, and it's all contextual, but ours is contextually true. So we'll talk about that in a second. Now, this asset, we actually only did the deal on the 1st of January this year. And let me tell you, doing a cross-border M&A deal on New Year's Eve into New Year's Day is probably not the best time in the world to do it, but we did complete it. And we had a pro forma market cap at that time of around $60-odd million. Today we're sitting at about 138, 10 months later. How we found this asset, it is the same team that was involved in Firefly Metals, and you'll see that presentation in a few, I think in a couple. It's also the same team that was involved in Andean Silver. Just to talk a little bit about our group, we do scour very friendly places in the world for copper projects, silver projects, etc. We've looked at hundreds. And so you know when this group of companies, and there's a few more to present today, find an asset, you should be backing it. And the only way I can say that with confidence is to look at the track record of all of those. So we've held this asset for around 10, 11 months. Why did we get in there? What were the strategic pillars? What were we looking to do with this asset? Well, as Simon Lawson talked about a little bit earlier, you know, some of the best places to find resources and high-grade resources are near existing mines, and I'll talk you through that. But we took a view that we could grow the resource that was already there. We could probably find something new, you know, which is a little bit of geological arm waving, but you back your geologists in. We also felt that there was a study that was completed on this project and we could improve that with updated economics. But we also thought that there would be merger and acquisition activity in this region. And I'm going to go through each of those. But why did we like this asset? Well, it already had a high-grade resource of 10.5 million tonnes at 3.5% copper. It's right next to a mining town. It's got a mill already there, undercover, connected to Quebec hydro power, so green power. You could almost call this green copper. It has the most friendliest First Nations that you can find in Quebec. I actually play golf with the chief, and I don't let him win because I'm a little bit competitive. It has government support. We have Quebec investors in this company. So it's got all those things that you'd want. Plus the mill is actually oversized in terms of there will be capacity. If you look at the PEA that was completed by the company back in May 2022. Now, under the ASX rules, we aren't allowed to go into that PEA because it's not JORC compliant, but it is publicly available. And I had someone ask me a question earlier before I hopped on at the stage. And so given that it's public and someone's asked me a question, I can answer that question for that person. And that PEA showed 24,000 tonnes of copper per annum, producing about 700 million of Canadian free cash flow. However, that was done with a gold price of $1,800 per ounce. Consensus today is somewhere around 3,200 US per ounce, with spot at 4,200. It was done with copper at $3.50. Today, it's over $5. It was done when the Canadian peso was actually strong against the US. And for those of you who don't follow the copper market, the copper concentrate market is especially short of supply. So I was recently in London for the LME week, and everyone is after copper concentrates, from the big traders to directly with smelter operations. We happen to already have an offtake in place. The concentrate has already been tested. It's a 28% copper concentrate, which is probably one of the highest grade that you'll see in the world, with no deleterious elements. So what smelter operators are looking for, and traders are looking for, copper that doesn't have arsenic or doesn't have selenium, some of those chemicals that cause a few problems in the smelter. Ours is exceptionally clean. So you'll notice I'm going to be very slow through these slides. Okay, I'm going to talk a little bit of geology and a little bit of region and some of those successes that we've had in a very short time. So you might recall I said one of the strategic pillars, can we increase the resource? Well, after 9 months, we increased that from 10 million tonnes to 15 million tonnes at 3.3% copper equivalent. But we also increased the level of indicated resources up 78%. And whilst we were at it, we made a discovery. And what I want to focus on, if you have a look at that tenement map there, have a look at the top, and you see the red outlines for our tenements. Historically, when you go to that region, and this is a long section of that region, there's 3.5 million ounces of gold and 1 million tonnes of copper that have come out of an 18-kilometre strike length. So just bear that in mind, and copper at those times was 50 cents a pound, and gold was $200 an ounce. History has shown me in many companies you can make discoveries near existing mines or historical mines. What we inherited with this is, in this 18-kilometre strike, you can see there's nearly a mine every 1.5 kilometres. And these miners back then, they never spoke to each other. So, you think of Canadians as normally friendly type of people. Well, they're particularly unfriendly to each other. They never shared data. So when we've come along, we've got 250,000 different images that have not been put together for a 3D geological model. So our smart people we've built an AI model, which is beyond my comprehension. But we've built this AI model, and what our geologists can then do is convert that data into a 3D geological model. Now, that will take around a year, and it sounds fantastic, but I'm a person who says, well, okay, that's great theory, but actually show me that it actually works. And so where we first tested that, using old drill logs, old data, was at a place called Goldeneye. And lo and behold, in Goldeneye, in the first hole, we hit visible gold. And with only 1,989 metres of drilling, which is not much drilling at all, we were able to convert into an indicated and inferred resource of 274,000 ounces at about 5 grams per tonne, less than 300 metres from surface. Very short period of time. So strategic pillar number 1, grow the resource. Strategic pillar number 2, can we make a discovery? And when you hit visible gold, that's pretty exciting. So we'll be coming back to this ore body in the first quarter of next year and drilling that again. And it will likely go into an updated PEA that we put out. But when you got those grades, and you can see there's also access there, you go, well, if it's never been mined, why is there a ramp down there? Well, back in the 90s, The Canadian miner decided to put a dual access ramp into this area and they were going to drill it from underground. But they made a discovery of copper elsewhere, left it, never went back. And guess what? This only happens to be 3 kilometres from the mill. The flagship of our deposits is called Corner Bay. That's roughly around 10 million tonnes at 3% copper equivalent. This is very much copper dominant, so 80% copper, 20% gold. Again, our view is, can we make this bigger? So we've certainly increased the amount of indicated. We made it slightly bigger, but we've also hit copper outside the resource. 7.3 metres at 4.6 copper equivalent. That's through the use of downhole EM, which is not anything new or hasn't been invented in the last 5 years, but it wasn't extensively used. We also have a couple of other plates that we'd like to drill in that region. So where are we drilling right now, and where to look for news flow? I'm just going to take you back a few slides to explain why we're going to this area called Cedar Bay. So Goldeneye, now I'm going to move away, I've got a really loud Kiwi voice, okay, so you'll be able to hear me. So Goldeneye, you can see up the top left there, right next to it is Cedar Bay. And in Cedar Bay, there is a resource there already, but there's some significant high-grade gold copper hits. Our theory, again, using this data that we've converted, is that there is more to be found there. And so we have put a couple of drill rigs to work on that. And if we can grow that resource, well, given that there's already underground infrastructure going into Goldeneye, we just drift straight across to Cedar Bay. We don't have to rehabilitate that historical mine, but it produced a hell of a lot of copper and a hell of a lot of gold. And so already we have hit high-grade gold and copper in that region, and that's somewhere to watch out for news flow over the next short period. So what can you expect from us coming forward? Well, we are doing some work on the historical study. And to answer, I remember there was another question that I was asked about that historical study that I'm putting every caveat on. We're not endorsing it because the ASX won't allow us to do that. But the capital that was associated with that was only 180 million Canadian. Okay, so to get a 24,000 tonne copper producer for 10 years without any more exploration success, CapEx intensity is exceptionally low on those numbers at about $7,000 a tonne. Foran, which is a very high-profile copper developer in Canada, I think is somewhere around $32,000 per tonne. But what it means for shareholders is the burden isn't there to fund $1 billion CapEx. I mean, and as investors, and I'm an investor as well, that is something you should always look to. We will be applying some different metrics to that PEA. Previously, under Canadian rules, you can basically just chuck the entire kitchen sink at it. Under Australian rules, you need to have 70% indicated and 30% inferred resource. So a much higher confidence, and that's what we're looking at doing. And then we can apply those economics, that gold price of 3,000 plus, the copper price of in the 4s, even though it's in the 5s, and the treatment and refining charges for copper were about $80 a tonne. So that's what a smelter historically would charge you to treat your concentrate. At the moment, they're paying you to treat it, okay? They're paying you as well as paying you for the revenue side of it as well. So it is an amazing market to be in. So we can then apply consensus pricing to treatment and refining charges. We have a smelter just around the corner, but we already have an offtake in place, who happens to be our second largest shareholder, called Ocean Partners. They move 1.5 million tonnes of copper per annum. And the best way I could describe them is, if you think of the large commodity traders in the world, think of Glencore, think of Trafigura, it is the most absolute friendliest version that you could think of those two. And as a shareholder, they want to get us in production. So on that note, I will leave it there with finishing now. Thank you very much.